I am Shrishti Verma and I am the student of BBA. Today I am going to present my video on. So here we start. First, the topic is cost accounting. Cost accounting is the classifying, recording, and appropriate allocation of expenditure for the determination of the cost of product or services, and for the presentation of suitably arranged data for the purpose of control and guidance of management. It includes the ascertainment of the cost of every offered job, contract, process, service, or unit as may be appropriate. It deals with the cost of production, selling, and distribution. There are lots of objectives of cost accounting. So, for the first, ascertainment of cost. The basic objective of cost accounting is to ascertain the cost of a product, job, or service. Expenses relating to a product are collected from diverse sources. Second one, the control of cost. The second objective of cost accounting is to control the cost so that the maximum and better production at minimum cost may be made possible. To achieve this objective, the techniques of budgetary control and standard costing are adopted. Third one, reduction in cost. Costs are not only to be controlled, but constant efforts are to be made for reducing them. Cost reduction implies real and permanent reduction in the unit cost of goods manufactured or service rendered without impairing their suitability for the use intended. Next one is determination of selling price. Cost accounting provides cost information on the basis of which selling price of products or services can be determined. In the event of depression or in recession, cost accounting guides in deciding the extent to which the selling price may be reduced to meet the special situations. Next one is managing cost with revenue. The profit of any activity can be ascertained by matching cost with the revenue of the activity. The purpose of this step is to determine profit or loss of any activity on an objective basis. Last but not the least is providing basis for operating policy. Cost accounting is an essential tool for the management to formulate operating policies and to take business decisions like determination of cost volume, profit relationship, whether to buy or make an article, etc. The next topic which we are cover is cost accounting versus financial accounting, or the dissimilarities between cost accounting and financial accounting. So the first basis for the comparison between cost accounting and financial accounting is meaning. Cost accounting is an accounting system through which it keeps a track of various costs incurred in the production activities in the business. And the financial accounting is an accounting system that captures all the records to show the correct financial position of the company at a particular date. Information type. In cost accounting, we record the information which is related to material, labor, and overhead which are used in the production process. But in financial accounting, we record the information which are in monetary terms. The type of cost is used in recording. In cost accounting, both historical and predetermined costs are used, but in financial accounting, only historical cost is used. The users. The information provided by the cost accounting is only and only used by the internal management of the organization, like the employees, directors, managers, supervisors, etc. But the information which is provided by the financial accounting are used by the external parties also, like creditors, shareholders, customers, etc. Next basis is valuation of stock. In cost accounting, we value the stock at cost, but in financial accounting, the cost or net realizable value, which whatever is less, we valued at that cost. Mandatory. Cost accounting is not mandatory in all the firms, but in manufacturing firms it is mandatory. But financial accounting is mandatory in all the firms. Type of recording. Details provided by the cost accounting are frequently prepared and reported to the management, but the financial statements are reported at the end of every accounting period, that is 1 year. Profit analysis. Generally, the profit is analyzed for a particular product, job, batch, or process. But in financial accounting, the income, expenditure, and the profit are analyzed together for a particular period of the whole entity. Purpose: reducing and controlling the cost, which is the main purpose of the cost accounting. But in financial accounting, the keeping complete record of the financial transactions. Last basis for the comparison of both the accounting method is forecasting. Forecasting is possible through budgeting techniques, but forecasting is not at all possible in financial accounting. Thank you so much for listening me, and I hope you understand the concepts which I want to tell you. Stay safe, stay healthy, and thank you so much.